Let's be real, guys. How many times have you been absolutely destroyed in crypto, where Ethereum and Bitcoin all of a sudden drop 30 to 40% in the matter of minutes, and you're wondering what the hell just happened? Well, in today's video, I'm going to tell you exactly what just happened and how you can avoid it every single time in the future. This is the anti-Wrekt rulebook. And when you understand this system and have this knowledge, you will never get wrecked in crypto again. In fact, it's very simple to learn. I'll show you exactly how it works. All right, guys, pretty simple framework. Let's just take a look at my tweet from January 8th. I said, and just like that, the bull market is over, at least according to past history. Break and retest, then heavy selling back through the 50-day moving average after a big run has like a 90% plus hit rate for calling the top. Also already down 40 to 60%, really disappointing start to 2025. Now, is it that simple? Is it that simple that if price is on the flip side and underside of the 50-day moving average, all we have to do is exit our longs and we'll never be part of a liquidation event again? Now, the opposite side of that is you can actually be short now and capture it, that move to the downside. We'll take a look at Bitcoin and compare it over the course of the last several years, and how accurate is this signal, and how accurately could it avoid us from ever being part of liquidation events when we're balls deep long on high leverage. Okay, we're also going to take a look at the framework of why crypto crashes so hard and why so many people lose money. Now, it's just funny to read these tweets. Now, price was up at 100K, price is back at 103K now. So while Bitcoin didn't have that big of a dip, it dropped maybe like 30, 40%. A lot of altcoins, everyone was balls deep in. What did they do? They dropped freaking 80 to 90%, okay? So this signal, while Bitcoin has been held up a little bit more recently in the past couple of years due to institutional funding, but 50-day moving average breakdown, Bitcoin dropped 32%, altcoins dropped 70 to 90%. 50-day moving average breakdown, Bitcoin dropped 32%, altcoins dropped 70 to 90%. And if you're like me, you're not really trading Bitcoin, you're trading altcoins. You're looking for that degenerate 10 to 20x gains, okay? That's what we're here to do, but we also need to be able to protect ourselves and know when is price going to drop 70 to 90%. And just like these fuckboys over here, is this a joke? We're just getting started. Why are you ruining everybody's dreams? That's actually my buddy Kunal. And I said not just everyone's dreams, mine too, because that ended my bull run as well, okay? We've heard a million times, charting is not reliable, so much that it's just a big guessing game. Stick to fundamentals, 2025 is bullish, okay? Well, he is right that 2025 is back to being bullish, but for the majority of all altcoins, what are they? They're not bullish. Yes, this is creating a new cycle down here to take advantage of, but this is DOT, a major coin, negative 70%. Do you want to hold negative 70% when the majority of retail traders are all buying up here? Retail traders don't like to hodl. They are forced to hodl because they buy like a bunch of dummies fucking up here. Now, there is new buying opportunities down here, of which we captured, right? Look where we just bought Solana. Boom, around $100, okay? We didn't buy up here like a bunch of fuckboys. We bought down here, all right? ADA, where did we buy? We bought down here. See these little arrows? Those are my buy signals. ADA, ETH, where do we buy? We bought down here, not up here, okay? So you have to understand what are the market cycles and how to avoid this big, massive fuck you like we saw in Ethereum. This was the biggest liquidation event in history of Ethereum. Look at that fucking selling candle. And also this one back here. How do we avoid that? We don't want to be part of that. This is massive stops being taken out across the board, across all exchanges. Crypto exchanges probably lost 50% of their customer base. Why is everyone so quiet on this big run that just happened right now? Because most people lost all of their money because they were on the wrong side of the market during massive liquidation events. So let's just take a look at why this happens, okay? First of all, there's Fous 1. Diamonds in the rough, whales are buying spot cash positions. Retail traders have lost everything and given up. That's exactly where we're at right now. Retail traders have lost everything. They've given up while whales and smart money are starting to accumulate down here, okay? What happens? Retail traders start coming back into play, buying spot margin and leverage futures, okay? And that's kind of where we're starting to get into now. Everyone's starting to get a little bit more excited. After this big run, a bunch of retards are probably buying right up here, okay? instead of waiting for a potential pullback, which I'm hoping for, so that we can then continually add to these positions as opposed to buying into this momentum. Okay, that's where we are kind of right now, phase 2. Now, phase 3, this is when we see news, hysteria, new highs, crazy price targets, extreme FOMOs, and influencers shilling wag me. We're all going to make it, guys. Everything's going to go up. We're all going to get rich. And fucking the reality is nobody's getting rich except for a small crowd, the wolves, which is like 2% of market participants. Because what's going to happen to most people is they're not going to follow this framework, and they're going to ride everything down 70 to 90% again, get liquidated on all their positions. So what actually happens? As price goes up, people start getting 10x long, 20x long, 50x long, 100x long. And there's so much open interest in long leverage that's built up over time as price gets higher. And basically how that would look is that, think of it like a bridge and a bunch of weight on the bridge. The higher we go, the faster we go, there's more and more weight, AKA leverage, long positions open on borrowed money. Not money that people have, not on spot positions. This is on futures trading where you can trade upwards of 100x leverage. And the more weight that gets up here and prices continue to go higher, all it takes is one little whale fart, just one little, that's it, is all it takes. And there's so much weight up here. One big whale selling and dropping one big massive load right on the top of all this weight here, and boom, the bridge breaks. And how do you identify when that bridge is broken? Well, it's quite simple. When the 50-day moving average breaks on the daily chart, that means there was a big fucking whale turd dropped on all this leverage, and that's when you see the first liquidation event. At that point, you do not want to be long in the markets. That basically means that market structure has shifted bearish, and we start seeing lows taken out and continuations. Okay, we'll explain this a little bit more, but let's just take a look at the chart and compare this. Okay, let's take a look at Bitcoin over here. And when do liquidation events happen? Do they happen when price is above 50-day moving average? Maybe. Or do they happen when price is below the 50-day moving average? Okay, let's take a look at this run back here. Price is rallying, massive pump above the 50-day moving average until it finally breaks after a massive run. What happens? Boom, whale fart. Look at that massive fucking dump. Massive dump, and new lows are taken out. Okay, lows taken out, lows taken out, lows taken out, until we finally have one big rally. And then what happens again? Lows taken out, massive dump, dump, right? Until the 50-day moving average is reclaimed on a sustainable path, right? And this here is back when price is back in this phase, where whales are buying in diamonds in the rough. Retail has all stopped out because they were full loaded up on leverage. Okay, so that's what we're trying to identify. When do we not want to be on the long side of the market? Okay, and it's quite simple. When the 50-day moving average breaks down on Bitcoin after a major run, even though Bitcoin's only dropping 30%, what's happening to altcoins? Well, Ethereum dropped 48%. Let's take a look at like Beam, which is another major altcoin that a lot of people are trying to trade. Beam dropped 77%. So if you're one to be trading meme coins or altcoins and the 50-day moving average breaks on Bitcoin, you can bet that if you're continuing to stay long, the only time these liquidation events happen is after the 50-day moving average breaks. That means a whale just took a big fat dump on all the leverage, and now price has shifted into a bearish market structure. And if you're gonna stay long, be prepared to continually get dumped on until price finally bottoms out. It probably has some sort of demand zone in the past, and then the 50-day moving average is reclaimed. So this is a very, very simple framework that just is on repeat time and time again. So if you don't want to get wrecked, if we flip the 50-day moving average, which I've talked about for fucking years, and nobody wants to believe me, especially January 8th, everyone thought this was the beginning, which I was hoping for too. I was hoping that we were going to bounce off the 50-day moving average and see a pump up to 120 to 150, and then I cash out because I was loaded up. I was fucking loaded up on crypto. But once that happened, I was like, all right, I don't want to be part of the fucking liquidations that I know are coming. So what is kind of the rule book, and what happens after that first big whale turd? Well, the bridge is broken, and it can't be reclaimed until it's rebuilt somewhere down below. So the rule book is never buy the dip unless a new low is being taken out, right? If you want to buy the dip down here, that low is taken out, sure, you can maybe buy this, but then you want to sell it up here somewhere, back at a supply zone. And what that looks like is, okay, stops are cleared, whatever retail idiots are left, like, it's just a dip, guys, it's just a dip, let's go long, then long, 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 price starts rallying back up till again, people are starting to get 100x long, chasing momentum. Retail is chasing, okay? When smart money bought down here after the low was taken out. Then all of a sudden, like, it looks like just the tip of the iceberg that the bull market is back. But what people don't see is all this leverage that was just rebuilt again. What happens after that? This whale comes in, goes, ha ha ha, right on their face again. Liquidation event, lows are cleared again, okay? The bridge breaks again. People start rebuilding it, bridge broken. Same thing happens again. Lows are cleared, stops. Everyone's like, it's just a dip, it's just a dip. We start loading up on leverage again. Whales come in right on top of their faces again because they don't see that under this tip of the iceberg is all this leverage that is rebuilt again until it breaks down again, until finally retail traders, their dreams are crushed. They've lost so much money that they have nothing left. And that's the final capitulation until finally the 50-day moving average is reclaimed. Boom, price breaks back above it. We probably have some sort of consolidation breakout to the upside. Probably some sort of demand zone back here where price finally halted out at a long-term scale. Okay, and then we reclaim, and then we can start buying because we're back in this diamond in a rough phase one area where retail traders have lost everything and whales start accumulating again. As you can see, that's exactly what we did, buying into all these spot positions. SUI as well was another one that we got into. XRP, Beam. Boom, look at us picking up SUI down here for the nice big juicy gains, right? So this is just kind of a simple framework, guys. If price is back under the 50-day moving average on a mega run, you can expect that there's going to be lows that are continually taken out because there's going to be a bunch of retail traders that underneath these lows, they place all their stops. That's liquidity. That's where pro traders want to grab their money. Stop them out, buy in, ride the rally up, short here at supply, then boom, liquidation event again. And we can just see this happening on the chart. It's like clear as day. 50-day moving average broken. As I called this here on January 8th, what happened next? If we look at like Ethereum, ETH, okay, right? Just dip, guys. Wrong, lows cleared out. People bought in there, smart money got in, rode the bounce, retail traders got stopped out. Boom, what happened? Lows cleared, boom, whale fart, huge dump, biggest dump in history. Pro traders accumulating down here, locking in gains. Iceberg. What happens again? Liquidation. Price is still deep under the 50-day moving average. Right? At this point here, price is under the 50-day moving average the whole time on Bitcoin. The whole time is on Bitcoin until price broke above the 50-day moving average right here on this big spike on Bitcoin, reclaimed, bull flagged, and then off to the races, absolute shred. Right, where did price halt out on Ethereum? At this weekly supply zone. We're looking for another continuation to the downside. Now we have potential dip buys coming in for Ethereum. Okay, this is the anti-Wrekt rule book. If you want to avoid all this, which happens every fucking time, lows continually get taken out, it's as simple as looking at the 50-day moving average on Bitcoin, which sounds crazy, right? That sounds crazy to think it's that simple, but it really is. And that is something that has protected me for many, many years, being involved in the crypto market, being able to lock in 7-figure gains on the way up and then not be part of this because this fucking hurts. This fucking hurts if you don't understand this. And I know it's hard to shift mindsets when you're so hyped up about Trump becoming president and we're going on the Trump run, okay? But nobody wanted this. Nobody wanted that. But that's what you got. And the sign was right here. I said it on January 8th. Okay. I also said this in the 2021 bull market. Nobody wanted to believe me. Prices dumped 90% after that. So that is the anti-Wrekt rulebook, guys. This is just a little taste of what's in my new mentor program, okay? What I didn't tell you is how to trade all that. I'm going to tell you exactly how to trade all that in my new mentor program. It's actually not even out yet. It launches on Sunday by the time I launch this. But in the meantime, you can also watch how I turned $80,000 into 7 figures in 30 days on that first Trump pump. This one right here. Boom. And then called the top here, January 8th. That is a great video. It teaches you my framework, the millionaire crypto trading strategy. And again, I got my new mentorship program, applicants approval only. It's not for everyone. Okay. But anyways, I'm back on YouTube. It's been a little bit. Why? Because I was building this whole fucking brand new mentorship program for the last fucking year. God damn it. So sick of doing it, but it's finally finished. Let's make some bank. 2025. Let's go. See you guys in the inside. Subscribe and like this video also. Peace.